What's up, team? Sean from Invest2Live here, and I want to talk about a really big trend that's about to get popping, and it's 40-year terms for home mortgages. I've been seeing ads for them. I've been seeing local credit unions talking about it. I've been seeing small local community banks talking about it. But the reality is it's not all it's cracked up to be. You might save a little bit on your monthly payment, but long term, you are paying a very, very big price for financing your home this way. So you really got to be careful if you're thinking about doing this. And I'm going to show you two basic calculations that I think are going to knock your socks off a little bit. So before I do that, I'm going to jump right in. Please give me a like, subscribe, and a comment below if you don't mind. I'd love to know if you currently have a mortgage or not, and if you've ever heard of or used a 40-year mortgage. That'd be great, just from the standpoint of getting a feel for what people have seen and what they've dealt with out there. Now, as always, I don't want to waste any time. Let's jump right into the math here. So all I really did was just type in to get a basic calculator that can go up to 40 years. It's sometimes a little bit tough on some of them, but I'm actually starting at a 30-year mortgage just to give you guys some basic numbers. So here's what we're doing to make things as simple as possible in terms of comparison. I went with a $500,000 home price. I know in different areas they can be much, much higher, much, much lower, but just a rough idea. I went with a 5% down payment. So you're going to end up having a mortgage of $475K over 30 years at just about a 7% interest rate. I pulled this off of a most current number. I'm not looking at PMI, property tax, or home insurance because I want all things to be equal for the sake of argument here and just looking at the financing. So I calculated this number out. Let's just do it one more time to make sure it comes out the way I want it to here. And we're going to scroll on down here. You can see, once again, quick view, 500K home value, 475 mortgage. We're going to have a total monthly payment of $31.57. It's a pretty sizable payment, all things considered, since we're not looking at taxes, insurance, and PMI here, but just let's start there. $31.57 just for the financing of this home. Okay. So as you know, you'll have 360 payments. Here's where it gets really, really interesting. On a $475,000 mortgage at the current interest rates, you're going to be paying interest of $661K and a total payment over 30 years of 1.161. That's a lot of money. That's quite literally approaching 2.5, 3 times your initial spend on the home. But let's look at the 40-year piece. The reason people go with 40-year mortgages should be pretty obvious. The goal is a longer term period of amortization, means that it's going to be a smaller monthly payment. So the reason people do this, especially when interest rates get high, is because they frankly can't afford a home otherwise. They need to find a way to lower the payments to make it more affordable, whether it's a DTI perspective or just getting improved in other ways. The problem is you pay a lot more than you think for a 40-year. And I'm even going to keep some assumptions really simple here. On that exact same 30-year mortgage, excuse me, assuming the rate does not change whatsoever, right? You are now looking at, always helpful when I hit calculate here. Now, everything's the same, except we're adding 10 years of extra loan time, okay? So let's scroll here. You can see now we basically dropped down not a whole lot, down to $29.48 in terms of monthly payment. We were not too much higher, right? Only a couple $100 difference, even even frankly, right? But the big difference is here. When you look at the total interest paid of $940,000, almost $1 million in interest by adding that 10 years, and now a total all-in payment of $1.44 million. This is what you're paying for. 40-year mortgages are amazing for banks, for investors. They're going to sell these all day, especially these interest rates, because if you're an investor, I want you to think about this. You are now holding a note at 7% interest for 40 years guaranteed. That is a wild, wild investment, and frankly, a great investment. If I could invest in 40-year mortgages at 7% interest rates, I'd be doing that all day. I'd retire a very wealthy person. So I just really want to call this out that if you're in the market and you're shopping for a home, I think it really behooves you to be very careful in understanding the full picture, the full amortization, the full interest you're going to pay, because that extra 10 years is practically like buying another house, really, for all things, as we consider all things here. So just please be careful before you jump into stuff. The one caveat I want to add at the end here, interest-only loans look very similar in terms of low cash payments, better cash flow. You know, you can decide to pay down the principal every month. Please just be careful, because we have no idea when our housing is going to get back to what we consider more normal sort of standpoint. This might be lower prices and higher rates, could be lower rates and prices stay the same, but there has to be some sort of affordable equilibrium that's going to happen here. Don't get caught up in it. Be careful, get lots of options, do the right thing for you, but make sure you know the full cost of your loan, because monthly payments are not the only thing that matters. Team, thanks so much for watching. Have a good one. Take it easy.